let's start with the first question that is on everybody's mind. This was normal algorithm behavior, but what does that mean? Some of the headlines you may have seen say, a double spend happened on Bitcoin. All right? No, it didn't. A double spend did not happen on Bitcoin. And the reason a double spend did not happen on Bitcoin is because the Bitcoin consensus algorithm, its only purpose, its primary purpose is to coordinate in a decentralized fashion so as to ensure that double spend cannot happen. There is always one singular history on the blockchain, eventually, and that singular history, as time goes by, becomes more and more immutable, and it can only contain one version of the truth. There may be users, nodes, miners, participants who have different versions on their own computer for a short period of time. This is normal. It's part of the decentralized operation of the network. And in those different versions, there may be different versions of a block at a specific height or different versions of a transaction within that block at a specific height. This is a temporary phenomenon, and it gets resolved by the time the next block gets mined. So we'll talk a bit about how is it possible for two blocks to get mined at the same time? How is it possible to get what's known as a consensus fork, which is a normal part of the network operation and happens on average every couple of weeks? How the network resolves these consensus forks, what it means for transactions that are inside the blocks that are competing for the same height, and finally, what happened today and whether that was in any way different. The simple answer is nothing happened today. Okay. Something did happen today. Some irresponsible, poorly sourced and researched journalism happened at one of the very volatile moments in a bull market where there's a lot of new people who do not yet understand the technical fundamentals and as a result got scared. Now, this is a simple case of information asymmetry. What that means is those who understand how the Bitcoin blockchain works and understood what this was quickly, could then look at the market reacting in a panic and say, this is a nice opportunity to exploit information asymmetry for profit. And a lot of people who didn't understand how the Bitcoin blockchain works panicked. Some of them respectable journalists, or I wouldn't say respected journalists, who accidentally promoted information that was incorrect, and that information spread really quite broadly. In fact, some of that information ended up hitting mainstream financial publications, including various information services such as Reuters and Bloomberg, etc. So that caused a lot of really upset and panicked users. So let me take a brief break here and take a look at the chat and see if all right, yes, I'm not going to talk about your conspiracy on mining. I'm not going to talk about your conspiracies about the Chinese government. La, la, la. Very good. Thank you so much, new volunteer moderators. And I'm looking to see if there are any other of my regulars who are YouTube members who might be able to help me here. I see we have some new members. Thank you so much for joining. Very much appreciate that. So those of you who are new, welcome to the channel. And you don't really get anything, right? You know that. You don't really get anything for YouTube membership. You get a different color user ID. You get a little symbol, the super chat symbol, and you get some fancy custom emojis, which really isn't the point. The point is that you get to show your support and support my work financially, and that's wonderful. All right, so why no conspiracies? Conspiracies are absolutely okay. Conspiracy theories are not. I don't have time for your bullshit. It's really as simple as that. I do not have time. We have facts. We are doing technical education. We're going to analyze the causes and effects. We're going to analyze what's being reported. And I do not have time to engage in your conspiracy theories and fantasies. And also, I don't want you to waste the time of my audience. So that's why we're not going to tolerate that on the chat. So if you have a problem with that, you can address your problems. There is a button for addressing any moderation or content problems that make you uncomfortable. If you look to the top right of your browser window, there is a little X. And if you press that button, that will allow you to express your dissatisfaction with this free live stream. So please go ahead and do that. All right, let's get right to it. So what happens? What happens is that when you have a decentralized network, such as Bitcoin, that operates based on a consensus algorithm, which is also decentralized through proof of work, then miners are competing. And these miners are not connected to each other directly. They're intermediated by the Bitcoin network. And they may have a relay network for blocks and things like that, but they're not all in the same room. That would kind of defeat the purpose. And they're operating in direct competition and not necessarily with the same information. Now, proof of work mining involves a probabilistic algorithm. What that means is that there is a chance of finding a block. And that chance is calibrated so that, on average, we find a block, or we solve the proof of work algorithm on average every 10 minutes. And that's why Bitcoin's heartbeat ticks at a 10-minute interval. So let's pull some information about this up. I'm going to see if I can find some information, and this will come from Mastering Bitcoin. So it will take me a second to pull this up, so be patient with me. Now, imagine you've got two miners, and these miners are trying to mine on top of a block that they just saw announced on the network. So let's say, based on what we're seeing right now, the latest block that I'm looking at is at a height of 667051. So 667051 is the current highest block known. The longest chain is currently at its tip at a height of 667,051 blocks. Now, that block is the block that miners are trying to extend with a new block. So when they construct their candidate block, they set the hash, the fingerprint of block 667051, they set that as the parent or previous block in their candidate block. Now, their candidate block isn't advertised yet because it doesn't have valid proof of work. So each miner separately and independently constructs a candidate block. And they start filling it in with information. And one of the first pieces of information they put in there is the link to the previous block. That's how we chain blocks together, creating a block chain. The chain is a reference to the fingerprint of the parent. And if you follow these fingerprints all the way back from block to block to block, you get to the genesis block. Now, you can actually follow along. I'm going to show you a website here. Pardon me for just a second, because this will require me to flip around some browsers and do some different things. And I don't know how well this is going to work. So let's see. I may need to add a new button. This was last minute. There's no producer. This is completely ad hoc. So, you know, it's okay. It's okay. Do not panic. Do not panic. Let's see if I can make this work. I don't see it. I may have to reload it. Ah, there we go. I think this might work. La la la. I still don't see it. That's annoying. All right, never mind. It doesn't matter. I'm going to make this work one way or another. So let's see if I can make this work. All right, now I'm a little circle in the bottom. Not exactly what I was hoping for. Not exactly what I was hoping for. Oh, there we go. Okay, so that's a bit better. That's what I was actually hoping for. So here's my browser, and this is a Bitcoin Explorer. It doesn't really matter which one you use. They should have the same information. They don't always have the same information, obviously, but let me make that a bit bigger. All right, so this one I'm using is blockstream.info. Blockstream.info. You can use a different one if you want. I'm not a big fan of blockchain.info because they sometimes have incorrect information, so I prefer this one. But they're all the same. So here you can see 667051. Now if I click on this block 667051 that has already been published, this block is currently known to everyone on the network, and right at the top you see this. This is the fingerprint or hash of this block. Now the next block will have this in its structure as the parent, and when you look at the details of this block, somewhere here you should see its parent. No, I don't see its parent. Okay, so block 667051 has in its header this hash from block 667050, which has in its header this hash from block 667049, and if I was to keep doing that, I would end up right back at the Genesis block. All right, so the miners are constructing a candidate block, which basically is an empty block at first that contains only the header to the previous block, and then they start filling in the information in that block. And they immediately start the race in order to find the proof of work. This is their mining, their hashing. So they're hashing furiously to find a nonce that makes this block a valid block. In the process, they also do a few other things. They start filling in this candidate block and restarting their hashing. So they will put in a Coinbase transaction, which is required. This rewards them personally for finding this block. Now, that doesn't mean anything because this block has not yet been proven. They'll start putting in transactions from the mempool, etc., etc. Now, let's say one of these miners stumbles across a nonce that hashes in such a way that the block header is now correct. It has sufficient proof of work. Very good. Thank you for that. There's an extra microphone open when I go to the small circle version of me. I apologize for that. So is that causing a bit of interference? Please do let me know. Okay. So now imagine two miners, okay? Let's call them Alice and Bob. And Alice and Bob are mining, and one of them is in Japan, Alice is in Japan, and Bob is in Canada. They're very far from each other. They're at opposite ends of the world. Not in a geographic sense, but in a network distance. Now, let's imagine that during that time, Alice and Bob both find a solution to their respective candidate blocks. Let's call those blocks A and B. Alice mines candidate block A, and Bob mines candidate block B, and they both find the solution to within a few seconds of each other, perhaps, maybe longer. Well, they both go, yay, or their software goes, hashtag, yay, and then it immediately tells everyone on the network as quickly as possible, because you only win if everybody thinks you won, because everybody saw the result first. So Alice starts sending out candidate block A with a proof of work in it to everyone, and says, hey, I found it, here it is. And the way this happens is through a flood propagation in the network. So Alice sends it to all of the nodes that Alice is connected to, maybe over a relay network too, because Alice is part of a mining relay network. That's not important. And then each of the nodes that see this block validate it, and if they find it to be valid, they then tell all of their neighbors, who tell all of their neighbors, who tell all of their neighbors. Now, it's important to understand, Alice's A block and Bob's B block are both valid, right? They're both perfectly valid blocks. They may contain mostly the same transactions in mostly the same order, but not necessarily. Maybe Alice and Bob have different transaction selection algorithms. Maybe they saw transactions in a different order. Maybe Alice has some transactions that Bob hasn't seen and vice versa. So the blocks will have subtle differences. And because they'll have subtle differences, maybe 99% of the transactions in them are the same, they will have a different fingerprint, of course, and a different nonce and a different header value. But they are both perfectly valid. They both fulfill the consensus rules. As far as the network is concerned, either block is fine, whichever one comes first. Whichever one comes first. And this is a very important point of insight. Now, let's look from Mastering Bitcoin as how this actually works in practice. And let me see if I can pull up the series of images that you will find in Chapter 12 of Mastering Bitcoin, which is a free book. You can go and read it on GitHub, or you can go buy it on Amazon, because of course you will. And let's see if I can get this one up to show you and share with you. All right, I think this will work. How about, still having some difficulties with my button pushing because it's not actually doing what it's supposed to be doing. I don't know why. For some reason, yeah, for some reason my little director here isn't working the way I had hoped for. All right, let's transition this. Give me a second because I know the sound is poor here, and I'm going to fix that immediately. I literally built Okay, so what I was asking is, can you hear me? And turns out the answer was no. And I'm not sure why that is occurring. Oh boy. All right. Sorry about this. I'm trying to reconfigure on the fly, and that's not quite working. All right, I hope you can hear me now. So this is an image from Mastering Bitcoin. So this shows a Bitcoin network, right? And I don't know if we can see my cursor. Let's see. Oh, can you see my cursor? Yes, I think you can see my cursor. So if you can see my cursor here, here's the Bitcoin network. And these are various nodes on the network that are connected in a variety of ways. And here's a node that thinks that the top of the blockchain is the star block. So this is a block. Let's call it star. And everybody's already seen star. Star was the previous parent. You see here, this is what the blockchain looks like. So Alice here took star and built a new block on top of it, which we'll call upside down orange triangle. And Bob here took star and built a new block above it called triangle. And so orange triangle starts propagating out from Alice, and it goes out. And white triangle starts propagating out from Bob here and starts propagating, and some of the network are seeing this picture. They see the blockchain as having as its tip the orange block. These nodes here see that picture. These nodes in the top over there see the other one. So both are correct, but now we have two competing blockchains, two competing realities for the blockchain. All right, so what happens next? Well, what happens next is eventually half the network sees one block and the other half of the network sees the other block. So you end up with a consensus fork. So eventually the two blocks propagate out. And when that happens, let's do it here. Okay, so this is the eventual picture. All of the various nodes have now seen both of these blocks because they propagated. But half of the network thinks that actually Dorito, let's call it Dorito, which is orange triangle block, because that one came first, they think that one won. So they assume that one won. They then see the white triangle propagating as well, but they hold on to it just in case they're wrong about which one won, but they assume that the next block they're going to see is going to build above the orange upside down Dorito triangle. They don't assume that it's going to be the white one. Half of the network, however, sees the exact opposite. So they see white triangle as the winner and upside down orange triangle as a candidate, but probably didn't win because it came in a bit later. And so at this point there are two possible chain tips, and these two are competing for, these two chain tips are now competing for who's going to be a winner. Now, this is called a consensus fork. It happens on average every 2 weeks on the Bitcoin blockchain, and this is a natural reality of how consensus, decentralized consensus based on proof of work works. This is how it works. This is resolved very, very simply. What happens is, over time, another block is mined, and this other block causes this entire problem to be resolved in favor of one or the other side of the chain. So miners start building. Half the miners start building on top of white triangle. The other half of the miners start building on top of orange triangle. Now it's a race again, right? Some miners are using orange triangle as the parent in the candidate block. Some are using white triangle as the parent in their candidate block because they don't know which one of the two probably won. They just go with the one they saw first. They're both valid. And they start hashing and hashing and hashing. Now, at this point, someone's going to find a winning proof of work solution. And when they do so, they start propagating their winner. And depending on what they had selected as their parent, white or orange triangle, they will extend that chain at the disadvantage of the other potential chain. There is a very small possibility that, again, two miners are going to simultaneously find two blocks that simultaneously extend the two opposite sides of the two chain tips, causing a 2-block deviation. This is also normal. It happened in November of 2020 last time. A 3-block reorg is extremely rare. I don't think one has ever happened due to this normal consensus process, but it's estimated on average to happen every few years. A 4-block would happen every few decades, etc., etc. And that's why we say, as you approach 6 confirmations, now you're looking at an event that has the probability of happening every few millennia. So that, because this drops exponentially, the probability of such an event happening very, very quickly approaches, for all practical purposes, 0. So let's look at a picture again. Here we go. And in this picture, what we see is this miner over here in the center mined a new block. And this is the green block. Now, when they mined this new block, they were building on top of white triangle. That's the one they believed was the tip. So they end up extending that. By the very fact that they're able to propagate green out to everybody else, everybody decides that the chain that ends in green rhombus is the greatest cumulative difficulty longest chain and discards Dorito block because it's no longer relevant. So that's how these are resolved, usually simply within one more block. All right, so that's what a consensus fork is. I'm going to take a brief break here and look at the chat. Who learned something? Did anybody learn something from all of this? Hopefully you did. Hopefully you learned something that will help you next time you're trying to understand what it means when someone says, my transaction has one confirmation. My transaction has one confirmation means it's in a block that has been broadcast to the network. Two confirmations means it's in a block and there is another block mined on top of it. Three confirmations, 2 blocks on top of it. 4 confirmations, 3 blocks on top of it. If you have 6 confirmations, that means your transaction is in a block. There are 5 more blocks above it. And the possibility of all of that getting reorganized has dropped so much that you can now feel absolutely certain that that transaction in there is done and finalized. So let's check in the chat, see if people are learning. Okay, so this process ensures that double spends are not successful, because even though there may have been the same transactions in white and orange, from the perspective of those two sides, the sides that extended with Alice's block, the sides that extended with Bob's block, they see only one of those chains as the likely winner. And whichever transaction is in there is the one they're going to follow. The other chain sees the other transaction and the other block. And very soon, they're going to reconverge until the entire network has only one past, only one historical truth. And that will happen after 2, 3, 4, 5, 6 blocks with exponentially increasing certainty. So double spends don't happen. The reason they don't happen is because the decentralized network converges onto a common history within a number of blocks that prevents two different histories from occurring. There is only ever one block and one transaction in it that can spend the same amount that each node believes. There may be more than one chain on the network at the moment for the latest block that different nodes believe, but that truth will reconverge. So, what happened earlier today? What happened earlier today was this normal process of consensus forks where two miners found 2 blocks simultaneously or near simultaneously and broadcast them, and those were seen by different parts of the network, causing a temporary consensus fork, were in fact broadcast. There's a company called Bitmex Research, and what Bitmex Research does is they have a monitoring system. Now, the reason they have this monitoring system is because this is a very useful service for merchants, for node operators, for miners to be able to monitor. And the only way you can do this really is by putting sensors, which are basically just nodes, in different parts of the network and trying to monitor what the fingerprint of the latest block is. And if 2 of those sensors disagree, you know that 2 valid blocks have been propagated across the network and that there is a temporary consensus fork. Now, the next thing that happens, of course, is the next question that comes up very often is what happens to transactions in those two blocks? So if there are transactions there will be transactions in the block that gets discarded. Let's say that Bob's block B, that is the Dorito looking like block that I showed you before, inverted orange triangle just to help with the visualization. Let's say that one gets discarded. The vast majority of the network and eventually the entire network converge on a common answer. And that common answer has Bob's block in a minority chain, in a chain that is no longer the longest chain, one that gets discarded. So what happens is all of the nodes look at that block and say, okay, let's take all of these transactions in here and decide what we're going to do with them. First, let's see if they're already in one of the other confirmed blocks. Maybe they were in Alice's block. There's a good chance for a lot of those transactions, they're already going to be in Alice's block because Alice probably picked some of the very same transactions and got them confirmed. And when that chain became the real one, those transactions were in there, so no problem. They're not double spend, they're single spend. They're the transactions that Alice found, same as Bob's. And they boarded. They got onto the block. There will be some transactions, of course, that didn't make it. They didn't make it into Alice's block. So what happens is those transactions are returned into the mempool to wait for another chance to be confirmed. They effectively become unconfirmed again. You may see this in your wallet. Sometimes you will see your wallet say you have one confirmation, and then 5-10 minutes later, it goes back and says unconfirmed, and you're like, how is that possible? I didn't think you could go backwards on confirmations. Well, this is what happened. Your transaction was selected by Bob and included in Bob's block. The network, your wallet saw Bob's block as valid and winning at the time. But then there was a reorg and Bob's block got pushed out. It got discarded. And your transaction had never made it into Alice's block. So your transaction is now back in the mempool waiting to be confirmed. Back into the mempool. So let me give you an analogy to help explain this a bit better. You're running an airline. And this airline is not a traditional airline where you have assigned seating. It's an airline where what happens is people have a bunch of tickets and the airline people have a list of all of the passengers. Let's call that list the mempool. And there's 2 flights sitting at the 2 boarding gates ready to go. And they start boarding and they start calling names and they board and they board and they board and they board. And one of the flights takes off. And the other one discovers that it has a fundamental technical problem. They're out of coffee. They can't fly under these conditions. That would be inhumane. So they announce, ladies and gentlemen, we are out of coffee. This flight will not depart today. Please unbuckle your seatbelts and proceed to the boarding gate so you can be reseated as standby on another flight. And all of the passengers go, ugh. And they stand up and they go out into the boarding gate. Now, the boarding gate people say, okay, we have a flight that didn't take off. We thought it was going to take off. We'd already checked everybody off the list, but it didn't take off. So great, bring the list back. I'm going to start calling names. Anyone who's still here, who isn't on the other flight, come and see me so I can put you in standby. And they go through the list. That's basically the transactions going back into the mempool. And maybe one of the relatives of these people got a notification on their mobile that said, Aunt Margie is airborne and she's going to be with you soon. Turns out, Aunt Margie is back in the boarding gate and now flying standby and won't arrive until tomorrow. And you're like, how could you tell me that Aunt Margie's flight was confirmed when in fact she ended up back in the boarding gate and is not arriving today? That's precisely what happens with the mempool. All right, so I hope you enjoyed that analogy, and I hope it helped you understand what happened. Now let's talk about one more edge case, which is either a deliberate double spend attempt, not a double spend, because you can't double spend, a double spend attempt that occurs when one of the people constructing transactions is sending multiple different versions of them to the network with the hope that they will be able to cheat a merchant who is not counting and waiting for enough confirmations. Let me give you the scenario. You go into a store and you want to buy a flat screen TV. And your spouse, holding a Bitcoin wallet on the exact same keys, goes into another store to buy a motorbike, right? And you're both spending $2,000. It's an expensive TV and a cheap motorbike. Just give me a break here. I'm coming up with this stuff on the fly. So you pay for the TV, $2,000 transaction, and your spouse in the other store pays for the motorbike, $2,000 transaction at exactly the same time. Now, because you're in the same network as the vendor, they see it on the blockchain, and most likely what happens is they're going to say, hang on, we're going to wait for a confirmation. I'm not giving you a TV on an unconfirmed transaction. You're going to have to wait here. I'm not giving you a motorbike on an unconfirmed transaction. And then one confirmation comes through. Now, what the merchant doesn't know is that, in fact, due to an incredible coincidence, which you were exploiting by doing this at different stores every single day, there was a block reorganization, and they saw you spending that money to them for the TV, while their competing merchant at another store saw you spending the same money to them for a motorbike. Same input addresses, two different destination or output addresses, or maybe the amounts are different, or maybe you paid it back to yourself. It doesn't really matter. You've got two competing transactions, both of which appear to have been confirmed once for each of the vendor's perspective, because their node sees them included in a block that is valid. Now, if at that point they let you walk out of the store with the TV and the motorbike, at some point in the very near future, 10 minutes later, one of those two blocks is going to get orphaned in a reorganization, and either the TV vendor or the motorbike vendor is going to be out some money, because it's as if that transaction never happened. It will appear as unconfirmed, but because the transaction paying for the other item in the other store was confirmed, that money has been spent, and since it can't be double spent, that transaction isn't valid anymore. It's not going to go back in the mempool. It's not going to be included in a future block, because what it's spending has already been spent in the other store. So because the vendor let you walk out of there with the item with just one confirmation, they're out that money. Here's the thing. This doesn't matter for small amounts. It also doesn't matter in situations where the transaction is either reversible or there is recourse or recovery. So for small amounts, if you go to Starbucks and you buy less than $25 in scones because the scones are delicious, and you go up to the counter and you pay with a credit card, they will not ask you for a signature. The reason they won't ask you for a signature is because the extra time it takes for you to sign the credit card slip for items under $25 is not worth the time versus the risk of you going back to your credit card provider and getting that transaction reversed. Now, Starbucks knows that if you sign for $24 worth of scones and then you go back to Visa and you say, I didn't eat those scones, you rapscallions, I want my money back, Visa will give you your money back. There is no signature on any slip. There is no way to prove that you made that transaction. They will reverse it. You'll get your $24. And here's the important part. You've already eaten the delicious scones. Now, Starbucks is out some scones. They don't care. And the reason they don't care is because if they put everyone down to a signature basis, the lines would get so long, they would sell fewer items. And those fewer items they would sell would add up to more money lost from opportunity cost than the cost of the occasional chargeback. So they're taking this risk on purpose. And you can do the same. Today, when there was a double spend, it appears that $22 worth of value may have been reversed. Now, we don't know if on the other end of that payment is someone who is now out $22. Why? Because if they were buying from my shop, for example, and they tried to buy $22 worth of items on my shop, I would not have given them those items after one confirmation. I would have waited for 3 confirmations before considering the order final and sending out the ebooks, the t-shirts, whatever. So if I was on the recipient side of this transaction, I would have marked this unpaid. 1 confirmation came through, a bit later it disappeared again, doesn't matter, probably a reorg. 3 haven't come through. The item has not been paid, sir or madam. Sorry, no t-shirts, mugs, or fantastic merch for you. All right, so I hope you're beginning to learn how this works. Now, for $22, I might even decide to configure my store differently. I might say, you know what, it's not worth it. I'm going to get more customers through this store. What I'm giving them is an ebook that doesn't have any cost for me. Maybe for ebook items that I just deliver immediately, and for values less than $10, I'll take it on 1 confirmation. Maybe I'll take it on 0. It doesn't really matter. I'm not really out anything. So that's my risk assessment. And the important thing to realize here is that that decision is a decentralized decision. Every recipient of a Bitcoin payment has to evaluate how much risk they're going to tolerate in a probabilistic finality system as to whether the transaction will be finalized and how much they want to see in terms of confirmations. In 2015, I sold my Mini Cooper for, I think it was about $11,000 in US dollars in Bitcoin. I waited 3 confirmations. After 3 confirmations, I signed over the title and the person drove away with the car. I didn't sell it at 0 confirmations or even 1 because it's $11,000. Also because they're going to drive away. And I don't really want to be running down the street going, hey, there was a reorg! Wait! There was a reorg! It's a normal part of consensus. Instead, I had a late meal at a local kebab place. I enjoyed my kebab. They enjoyed looking over the car in the parking lot, and then after 30 minutes I had my 3 confirmations, and I was satisfied. 3 confirmations was enough for a value of $11,000. Look, listen, if they were to drive away and there was a 3-block reorg, yes, I could probably call the cops or maybe email them again and say, hey, could you send it again because it got reorged out of the chain, and then call the cops. So that's the bottom line. That's how this works. Now, funnily enough, it's not always the amount. Let me give you another example that I offered recently, which is I would sell a house on 0 confirmations. I would sell a $250,000 house card full. That's what happens when your SD card fills up. So we're not going to get a high resolution recording of that one. That was funny, wasn't it? Card full. All right, I would sell a $250,000 house on 0 confirmations. Why? I don't care. What are you going to do? Run away with the house? I know where you live. In my house. So I've sold you the house, but if the payment doesn't come through, next morning I'm going to be, hello, excuse me, I'm here with the sheriff. I know where you live. I wouldn't sell a boathouse. I also wouldn't sell a caravan or house on wheels. No, that I wouldn't sell because then you can drive away with it. But I would sell a house that has a fairly robust foundation, because I'm not too worried about you jacking it up onto a truck and leaving overnight. All right, so that's the bottom line. In this particular case, $22 may be gone. It may not be gone. Maybe the merchant is out $22. There's a very strong possibility that what actually happens is this was not intentional. This was not you and your spouse trying to cheat a store out of a TV or trying to and a motorcycle at the same time by deliberately double spending. Instead, what's likely happened here is that some wallets use a function where they bump a fee. And when they bump that fee, in order to get a transaction confirmed faster, that creates a second transaction with a different hash. Now, you will see a lot of reports online that say that this is only possible because of a feature called replace by fee. This is only possible because of SegWit. This is only possible on the Bitcoin blockchain. This is not true. All of these things are possible on any blockchain. If you go to a blockchain that doesn't have replace by fee and you rig your wallet to construct a substitute transaction with a higher fee, miners who are operating on the basis of greed, we want them to operate on that basis, that's what motivates the game theory, will take the gimme more money in fee transaction even though they know there's another transaction spending the same stuff for a lower fee. They'll be like, yeah, I'll take that. I'll take that. Why not? Easy fee. So you can always transmit a transaction with higher fee on any blockchain that uses this kind of consensus proof of work algorithm or similar variations of it, and miners will take the higher fee transaction even if they know there's a competing one. So this happens relatively often, and they might not even know that there's a competing one. There's very easy ways to inject a transaction by sending it directly to the miner before they see the other one. You can send two versions. So if you're doing this maliciously, there's definitely ways to do it. And the incentive structure, the game theory behind Bitcoin mining always works the same way. Miners will take the most fee they can, and they'll do that. All right. Okay, so let me go into the Slido and let's see what people want to ask. Let's see if there are any good questions. I'm going to reload this now and see what good questions we have in the Slido today. By the way, the Slido is unmoderated. The chat is kind of moderated because I didn't really have a moderator today. And let's see. It's a bit of a shit show in the questions. Okay, I'm not going to answer that one. No. Let's see. I'm going to see if I have, no. 77 questions. So Anonymous asks, how do we move forward? It seems like fake news is becoming a major problem within Bitcoin 2 now. Really? This is a problem? It seems to me that if you act on misinformation that is so easily debunked, on information that basically exists in the Bitcoin white paper, like this information about what is the probability of a reorg happening is on page 8 of the white paper from October of 2008. This is not new information. The only equation that Satoshi Nakamoto put in the white paper is the equation that calculates the probability of a reorg based on the number of blocks that have elapsed. And it shows how that probability decreases exponentially and indicates why 6 is a good rule of thumb number for finality, although you should pick your own based on the amount and blah, 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 what we said before. So if you believed that something was wrong with Bitcoin because something happened that is described in the white paper in 2008, unfortunately what that means is you are a low information investor. You have invested in something you do not understand. Now, there's a lot of newbies right now. There's a lot of new investors who do not understand any of this. I mean, it took me 2 years to understand Bitcoin mining to a level of depth to really grasp the nuances of double spending, of consensus forks, of the race that happens between miners and how reorganizations happen and what happens to transactions. It took me a while to get all that. But if you know this information and you understand this information, I mean, I talk about this in my free workshop, Introduction to Bitcoin. This is an introduction topic. I talk about why you have to wait for more than one confirmation for expensive things, why blocks can get reorged even after one confirmation, and why this is a normal part of the operation of this consensus algorithm. If you knew this information and you watch the market drop 10%, and you know that the reason the market is dropping 10% is because of a rumor that is based on misinformation, you should probably anticipate that sometime in the next hour, day, maybe when Andreas wakes up, maybe later this week, maybe later this month, this information will be corrected. People will realize that this was misinformation, that the rumor was wrong, and then what's going to happen is the market will reverse. So that actually means that you have information that the majority of the market has not yet absorbed. They've absorbed the rumor, you know the truth. And if you know the truth with certainty, you trade against that. You're like, oh wow, these people missed what actually happened and are believing an article written by, an online publication that dabbles in sensationalism all the time. So what a wonderful opportunity to get 10% discount for something that will likely correct. No, maybe it won't. Maybe it won't. Maybe I'm wrong. Maybe Bitcoin was broken and there was a double spend and the Illuminati whales won. Maybe. I don't think so. So is this a problem for markets? You're not going to solve the fact that there will be information asymmetries. You're not going to solve the fact that there will be rumors. You're not going to solve the fact that people will believe stuff when they read it without doing any research or critical thinking, that they will unquestionably follow information that is sensationalist and designed to grab their attention instead of do the careful, slow study that's involved here. This will always happen. There is no way to fix that, but there is a way to profit from it. So to that point, Anonymous says, do you think it's easier to fake articles about Bitcoin than it is about anything else, given the complexity of the blockchain and how so many people that hold BTC don't really understand it? Yes. Yes, it is. It also shows why education is more important than speculation. Understanding how this stuff works. And not investing in things you don't understand well, or investing past your level of technical understanding and skill. Anonymous says, was it the same transaction in 2 blocks? It seems the amount spent is different. If yes, could it be indicative of someone deliberately trying to spend the same Bitcoin twice and testing the waters if there was some protocol flaw? Maybe. So yes, the amount was different. So it wasn't the same transaction, it was a different transaction ID, different fingerprint, different hash, spending the same inputs, but the output amounts were different. Now, there are explanations that are nefarious, but there's also simple explanations that are that this may have been an attempt to bump the fee. Now, when you look at a Bitcoin transaction, you can't tell which part is the payment and which part is the change, right? So maybe the $22 was the change. And so if you see in the next transaction or the other transaction, its evil sibling twin, that $22 amount is now $2, and there's $20 or whatever it was. I think it was like $24 and then there was $22 missing. Maybe that wasn't the payment, maybe that was the change. Maybe the evil twin transaction is one where this person gets $22 less in change, which means they bumped the fee by $22 because they really, really wanted this to go through. I don't know. And we also don't know if the recipient has actually been harmed by this. And we do know that there is no protocol flaw in this particular case. The system worked exactly as predicted. The nodes saw the two blocks, they then reorganized, they then put transactions back in the mempool, and only one of those two transactions is recorded on the blockchain. End of story, except for the poor journalism. So we may never know. The only way to find out is if the person who made this transaction, or maybe the recipient, comes forward and says, let me tell you what happened the other day. And even then, I would say, that's a nice story you have there, sir. Could you please sign the following message with that private key, just so that I know that you are, in fact, the same person who controlled the private key then, maybe, or that you still have control of the key? And again, in my opinion, what happened is too unlikely without being premeditated. Maybe someone has been propagating two different transactions like these for a long time until they finally got lucky and they were precisely included in two competing blocks. No, actually, that's unlikely. And the reason that's unlikely is because you've got to realize that when you're propagating two competing transactions, one of them goes through and you pay the fee. And if anything, right now, the fees are pretty high. So you're telling me that someone's going to keep doing this experiment, which they'll need to do with new transactions and new addresses, paying the fee every time this experiment fails, to double spend $22? Why? What is the point? There is no point, because this is not actually what happened. It's far more likely that what happened is you had a wallet that automatically bumps the fee, or a user who was manually trying to bump the fee in order to speed up the transaction. And maybe in the end what got through was the original transaction before the fee was bumped. And that's why it appears like it spent a smaller amount to change. Who knows? We don't know. We can't know. Anonymous asks, would a node continually propagating competing transactions get banned from connecting to the peer-to-peer network? No, they wouldn't, because this is normal behavior in the protocol. There are a variety of reasons why propagating competing transactions is a useful feature. And also, if you did implement this, what you would do is you would remove the useful feature. It's the same thing with RBF. If we didn't have replace by fee, you would remove the useful feature, the legitimate use case, but you wouldn't remove the capability, because that node could connect directly as a peer to one of the miners and try to inject the transaction there, bypassing most of the nodes in between. And they would be successful. They could be successful. So you will have created a situation where the normal use of this capability to do things like fee bumping, or maybe even to reverse a transaction that happened accidentally, which has happened from time to time, is thwarted but you haven't actually prevented someone from doing it by directly contacting the miners, or, and this is important to remember, you haven't stopped the miners from doing it themselves. And who has more incentive to do this than the miners? Miners, if they can, if they could, would exploit double spend ruthlessly, because they can make a lot of money, because keep in mind, they've got a decent probability of getting the fees, so it doesn't cost them as much as anyone who's not a miner, and they're already talking to other miners. So you've got to realize that we don't trust nodes, but we also don't trust miners. And when you don't trust miners, you have to allow the protocol to allow the competition. If you try to play around with the competition, you're not actually stopping anyone from doing this, you're just making it so that only miners can do this kind of thing. And that means that unscrupulous miners will be able to do it. Anonymous asks, I think it would be beneficial to explain how a merchant should treat a Bitcoin transaction and how the number of confirmations to wait before accepting a transaction should possibly scale. Well, you can configure this in various e-commerce platforms. I use BTC Pay Server, so I can configure how many confirmations I need, and I can do that based on the amount, among other things. And you can introduce more complicated policies if you want. But it also depends what you're selling and how fast delivery of that product will start and what cost delivery causes you. If I'm selling a physical product that actually gets delivered and then is out of my site, or if I'm selling crypto, which is also irreversible and gone, and it has an actual cost to restock, then I'm going to want more confirmations. If I'm selling an ebook that is a download, that the unit marginal cost is nothing or almost nothing, then if you go to all of this trouble in order to cheat me out of the $6.99 of an ebook that you could have downloaded on BitTorrent anyway because it's widely circulating, that you could have watched for free on YouTube as a series of videos in a helpful playlist that includes it, or you could have read it on GitHub because it's available under an open license, Congratulations! I mean, you really deserve an ebook at that point. You've executed a successful double spend against my store in order to get an ebook. You deserve an ebook, sir or madam. Congratulations. But I wouldn't do that for a crypto exchange, and this is really the big difference. If what you're giving is either a physical product that ships, it doesn't matter because you're not going to ship immediately. It's going to take a while, so you might as well add more confirmations before shipping. But if you're giving out a virtual item like a cryptocurrency, and that virtual item is given out in an irreversible transaction, then you need 6 confirmations. That's what exchanges do. In fact, if you're an exchange, you are monitoring to see if there is a consensus fork. And if you start seeing competing blocks out there on the network, you slow down deposits. Let me give you an example, and this is important to understand because a lot of people are going, why is Bitmex announcing that there are consensus forks? They're the evil ones here. No, they're providing a valuable service by putting sensors out there and looking for competing blocks. And they're providing a useful service for 2 reasons. The first reason is for the extreme exception, which is if there was actually a bug in the code, which happened. It happened in April of 2013 when there was a bug that occurred during the upgrade from Bitcoin 0.7 to Bitcoin 0.8. A bug in the handling of the database code that meant that if you tried to open more than 1,024 transactions in a block, the operating system would run out of file handles in the database layer and crash the client. Now, What happened is about half the network upgraded to 0.8, and they created a block with more than 1,024 transactions that they could happily propagate, validate, consume, verify, and use. And when that block arrived at a 0.7 node of Bitcoin, it choked. It verified 1,024 transactions, and on the 1,025th crashed. Of course, what happened then is, as soon as the node crashed, it would restart, it would go out on the network, it would ask for the latest block, it would receive the same block, it would validate 1,024 transactions, and then get the 1,025th and crash. And restart and get the same block and crash, and restart and get the same block and crash, and restart and get the same block and crash. So what happened is, all of the systems that were depending on 0.7 nodes basically stopped. But the 0.8 nodes kept mining. And they started diverging. And that divergence started increasing. So at first people were like, oh, we have a 1-block reorg possibly. Oh, we have a 2-block reorg. What an interesting statistical phenomenon. Oh, we have a 3-block reorg. I am getting very suspicious. A 4-block reorg? All right. Now, you know what they say, once is coincidence, twice is happenstance, 3 times is enemy action. Now you're like, oh, 4-block reorg? I don't think so. 5-block reorg? Something's wrong. Around the 5 or 6 blocks, everybody was screaming online, what is happening? Oh my God, Bitcoin's crashing, it's dead, it's broken. It's really funny that this happened in 2013. It was before the big bull run, so it didn't actually affect the market. Bottom line is, everybody got together, they quickly figured out why these nodes were doing this, and a patch was sent out, the code was rewritten, and there was a 26-block reorg. All of the transactions got rescheduled, and in the meantime, all of the exchanges stopped accepting deposits. Why? Because when you've seen a 4-block discrepancy on the blockchain, your 6 blocks until I let you buy something with your deposit is no longer a safe distance. So how do you know that there's a 4-block discrepancy? Well, you subscribe to a service like Bitmex Research that is doing the helpful and valuable work of monitoring the entire network in order to find discrepancies. And, you know, yesterday they found a 1-block discrepancy. They also looked at the transactions inside and noticed that one of them was a double spend attempt or potential double spend or some situation that involved the same transactions with different outputs spending the same inputs. And they flagged it. And some idiot journalist ran with that and made a big story out of that with a sensationalist title that was actually wrong. But here's the bottom line. We need services like that because if, let's say I'm an exchange and I have deposits on a 6 confirmation hold, well, 6 confirmations is great if there's no reorgs happening. But I want to monitor that because if I start seeing a 4-block divergence, I'm taking my hold to 10 confirmations. And in fact, if I see more than 4, I'm probably shutting down all deposits and withdrawals, at least temporarily, until I can figure out what the hell is happening with the network. That is fundamental risk management. And that is a service that is very useful to have. Bitmex has an automated system that does this. Bitmex Research on Twitter posts these messages automatically to tell you when such an event is occurring on the network. Every couple of weeks they post one of these. And back in November of 2020, there was a 2-block reorg that they posted about, and everybody freaked out. And I tweeted about it and said, okay, everybody calm down. This is a regular occurrence. It's part of the consensus, whatever. And so before you start building guillotines and being angry at Bitmex Research, understand that all they're doing is reporting on what is actually happening through an automated service, and that they didn't write the misleading articles that caused a general market meltdown. So, my moderator is now on, and the chat has cleaned up again. I would like to thank Yes to Crypto and others who jumped in and helped moderate the chat while my moderator wasn't here. Thank you so much for your service. I really appreciate it. Thanks for keeping things rolling. Let's see if there's a couple more questions to ask on the Slido. Anonymous asks, can proof of work provide immediate block finality like modern proof of stake algorithms? No, because they are optimizing for different things. Proof of work does not provide immediate block finality, it provides deterministic finality. In return, proof of work gives you deep immutability all the way back to the genesis block that is enormously expensive to violate. Whereas with proof of stake, you make a trade-off. You can get finality faster, but at the expense of opening yourself to long-range history attacks that allow you to rewrite the history thousands of blocks into the past, which is not possible with proof of work. So, this is a bit like asking, what is better, a Formula One car or an agricultural tractor? Well, it depends on whether you are stuck in mud and wanting to pull 5 tons of corn out of a muddy field, or whether you want to go around an oval at 180 miles an hour, only turning left. And for each of those, you make a different set of trade-offs. And if you were to take one of those vehicles and put it in the opposing scenario, it would be completely useless. That doesn't mean it's useless, it just means you're using it in the wrong way. So proof of work and proof of stake are fine-tuned to deliver different capabilities. It's not better or worse, it is simply different. And depending on what you're trying to achieve, you might find one more useful than the other. I haven't seen any questions about Lightning. Oh, here we go. This isn't about Lightning, but I really wanted to answer this. Anonymous asks, why the clickbait title? Really simple, Anonymous. The reason for the clickbait title is that all of this brouhaha started because of a clickbait title that then proceeded to deliver misinformation, poorly sourced, poorly researched, uncontested, unopposed, and that got a lot of attention. So here's the thing. I need to correct the record. And in order to get a ridiculous title on my video, I went for a ridiculous title. And hopefully that's going to match the amount of clickbaitiness delivered in the previous report. Lots of off-topic questions. Okay, I have an open topic Q&A at the end of January. January 30th is the open topic Q&A. If you want to come and ask open topic questions, not trolley questions, I'm not going to answer those then either, but open questions that are not about the double spend brouhaha that happened today, then you need to come to my open topic live stream. This is not the place for this. All right, so I don't have a suitable question for this, so I'm just going to close with the following information. One of the interesting solutions to confirmations is the Lightning Network. So with the Lightning Network, you can have an irreversible payment within seconds. And you don't need to wait for block confirmations because the Lightning Network uses a layer above Bitcoin that has its own additional consensus rules that mean that you don't have to trust the other person on the other end of the channel, that you can always refer back to the Bitcoin blockchain in order to resolve any dispute, but that if the protocol works in a predictable way and the counterpart of your transaction doesn't disappear, you have finality immediately. And that's a really convenient capability because that means you can do fast, cheap, private, and finalize transactions in a matter of seconds for an amount of pennies and in an amount of pennies. And you can get all of these capabilities without departing from the fundamental security model of Bitcoin. So if you want to understand that a bit more, I'm writing a book about it. It's called Mastering the Lightning Network, and you can see me writing it on GitHub with my co-authors Lalosh Tokun and Rene Picard. So I think that covers everything. I'm going to quickly check in the chat and see if there's anything else. All right. That's it, everybody. Thank you so much for attending this live stream. I hope that you learned something and you understand the concept of consensus forks, reorganizations, block confirmations, double spent transactions, fee bumping, and why this was an important topic to discuss today, and do it on the basis of knowledge and facts and understanding rather than hysterics. So I hope you enjoyed this. If you like the work that I'm doing, please remember that it is not sponsored by anyone. It is not paid for by anyone. I depend on community contributions, voluntary donations, and the vast majority of my work is actually given away for free, both in the form of free videos, but also in the form of open source books and other things. So I appreciate your support. First of all, please subscribe to my channel, turn on the notifications so you can see future live streams like this or other videos that I post. If you like this particular video, give it a thumbs up. That would be useful to help other people find it and understand. I'm actually going to change the title from the clickbaity one to something that's actually more specific about the topic of double spends and reorganizations. So please give me a thumbs up. It will help educate some more people about this specific topic. And if you really appreciate the work I'm doing, please consider sponsoring it on Patreon with a community builder subscription. And here's my final message for the day.
Hi, I'm Andreas Antonopoulos. If you enjoyed that video, consider that it takes a lot of work to produce open and free content that can be shared with everyone around the world. This isn't sponsored by some company. It's not promoting a product or an altcoin or some kind of investment scheme. My goal is simply to help explain the technology of Bitcoin and open blockchains to as many people as possible in a neutral way that focuses really on the incredible possibilities that this technology brings us. If you'd like to support that mission, subscribe to my channel and go on patreon.com/aantonop, where you can participate and help me build better content for more people. Thank you.